Let's talk about expenditures and how should they be placed, whether in trading account, P&L account or balance sheets. This theory is very important because it will help you to decide where exactly you have to plug in the expenditure. Okay, let's start. Capital expenditure. Now, what is capital expenditure? Expenditure that gives you benefit of enduring nature, means it doesn't gets exhausted in a single accounting year and the benefit is more than one accounting year. Such expenditure is known as capital expenditure. Okay, so I will just write here, benefit of gives benefit of enduring nature. Okay, and what about the revenue expenditure? It generally exhausts in one single accounting year. So, no benefit of enduring nature. Okay, so let me tell you that generally capital expenditure is placed in balance sheet. It is a balance sheet item. And revenue expenditure is a trading account or a profit and loss account item. I will give you an example. See, if you have spent some money to acquire a fixed asset, say land or building, you will place it in assets column of your balance sheet. It is a capital expenditure. But if you have paid some salary, rent, electricity expense, postage, commission, etc., all these payments, the benefit will be received within 12 months, one accounting year, and so they have to be generally placed in your profit and loss account. So these expenditures, these sort of expenditures are called revenue expenditure. Okay, now sometimes some revenue nature of expenditures also are capital expenditures. Now this is very important for accounting. When, see, just remember one word, put to use. Till any fixed asset is put to use, before that any expenditure done for the machinery or for any building, so that it can be put to use, that expenditure, maybe although it is of revenue nature, but it will be treated as capital expenditure. For example, I paid wages. Now wages is generally revenue in nature, but when I paid wages for installation of machinery, or I paid the lawyer fees so that I can obtain a license or a trademark. Okay, so although they are the lawyer's fees, the wages or the salaries, if are paid before installation of machinery for the purpose that it can start working, all the revenue in nature, such expenses will be termed as capital expenditure and will be added in the cost of the asset. This is a very important point. Now, some heavy expenditure incurred. That increases the efficiency or the value of your fixed asset. So say I have a machine which could produce 10 tons of a material in a day. Now I am putting some parts which will help me increase the production to say 15 tons in a day. So the efficiency of machinery has increases, so all the expenses relating to turning this 10 ton to 15 ton will be capital expenditure. Okay, now moving on to revenue expenditure. I have already told you the day-to-day expenses, routine in your nature. The day-to-day expenses are termed as revenue expenses, such as purchase of stock or material, they are revenue. Then if I put depreciation, if I apply depreciation on my fixed assets, that is revenue in nature. Okay, now see, some annual insurance premium paid, that is also your revenue expenditure. But if I say regular air conditioning expenses, now they are revenue in nature. Regular air conditioning expenses are revenue in nature. But if I do something that I install a full system so that the manager's office is totally air conditioned and some system is put in place, then that will be of nature will be of capital expenditure. See, custom duties paid or some taxes paid for import of machinery. Now, generally taxes occur again and again, so you can term them as revenue. But then, for import of machinery, taxes paid for import of machinery, they are capital in nature because till now you have not started the machinery. The machinery has yet not started production. So till the time it is put to use, we know that all the expenses are capital expenses, and so these expenses will be also included in capital expenses. But the general repairs of the machinery is revenue. Repairs and maintenance of machinery to keep it in the current working condition. See, this is important. To keep it in current working condition, the repairs and maintenance has to be a revenue expenditure and debited to P&L. Now let's talk about deferred revenue expenditure. Deferred revenue expenditure, learn that the nature is revenue only. Nature of such expenditure is revenue only. But you can say in most of the cases the revenue expenditures are small in amount, capital expenditure are large in amount. But an expenditure of revenue nature in a considerable higher amount, and the benefit of which I will not only receive over accounting year but even for the further accounting years to come, that expenditure is known as deferred revenue expenditure. I will give you an example. Heavy advertisement expenses. I endured heavy advertisement expenses on my product. Now such my sales will increase due to these heavy advertisement expenses, not only for the current financial year, not only for one financial year, but also for the coming financial years. So I cannot debit all the total expenses to my P&L because the benefit is received in the coming years also. So what do? I decide a portion of it which I debited to the P&L, and the rest amount for which I keep receiving benefit will be my assets, and I will put it in the assets column of the balance sheet. So this was a general overview about expenditure. It can be of three types: capital expenditure, revenue expenditure, and deferred revenue expenditure. Mainly talking about the first two. Remember that a capital expenditure, you have to take them to the balance sheet, whereas the revenue expenditure has to be generally debited to the P&L account. Sometimes some revenue expenditure can also be capital expenditure in special cases. For every case, you have to decide with your prudence and then do the accounts where it will go in the P&L or in the balance sheet.